The real passive income. Passive income is a type of unearned income that is acquired automatically with minimal labor to earn or maintain. It is often combined with another source of income, such as a side hustle. In the United States, the IRS divides income into three categories: active income, passive income, and portfolio income. Passive income, as an acquired income, is the result of capital growth or is related to the tax deduction mechanism, and is taxable. It is called progressive passive income when the earner expends little effort to grow the income. Examples of passive income include rental income and any business activities in which the earner does not materially participate. Some jurisdictions' taxing authorities, such as the Internal Revenue Service in the United States of America, distinguish passive income from other forms of income, such as earnings from regular or contractual employment, and may tax it differently. It can take a long period of work and accumulation before passive income can be earned. Passive income can be a way of creating financial independence and early retirement, because the beneficiary will still receive an income regardless of whether they are materially active in the activity creating the revenue. By contrast, if a person is not investing in assets which can create a passive income, when they leave the workforce, for example retire, are unable to continue working, etc., the money earned through the active income will often cease. Passive income is not always a lump sum payment, like an inheritance or proceeds from the sale of an asset such as a home or stock. It can also come from a source that has a likely continuity over time. However, it does not mean permanent income, i.e. it does not mean it is guaranteed. Some passive income may last for several years, or even centuries across generations. Examples of these longer-term sources of passive income can include property, dividends, debt, and other appreciating asset classes. Just because one person considers a source of income to be passive, does not mean it was the case in creation of the wealth, revenue, asset value increase. Whilst to the end beneficiary the income may be passive, there can often be effort expended by others to generate value, such as renovations to modernize and enhance a building that increases rental income or creates an increase in the property's value. The degree of passivity of an income depends on the perspective of the person concerned. What one person sees as passive income may be the active income to another person. Generally speaking, high-income groups have more diversified sources of revenue, leading to a higher probability to have access to hidden income, and therefore passive income can also be a good excuse for tax avoidance by transferring active income into the passive one. The loophole has resulted in a large amount of passive income, such as income from property transfer and property leasing, and even earned income such as income from non-regularly occurring labor remuneration, which to a large extent has not been taxed to the fullest extent. As a result, there is voice from the public that personal tax has been degraded to a wage tax aimed at exploited middle-income working class. Classification based on income source. According to the U.S. tax code, it does not specifically define income, but lists the various income items. The basic concept of the U.S. federal personal income tax is the gross income, which is defined by the IRS as all income from any source, except for those excluded by law. There are 4 types of income depending on the income source. A. Income derived from labor, also known as active income, which is income derived from labor provided by an individual in return for remuneration, or income derived from the conduct of a business. Common types of income from active working include wages, salaries, tips, bonuses and commissions, income from an active activity in a trade or business, income from the provision of labor, and income from illegal activities. B. Income from capital, also known as passive income, includes investments in the sale, trade or other disposal of invested assets. Common types of non-working income include interest income, dividend income, income from leasing or royalty-related activities, annuity income, income from partnerships, S-corporations, etc., and income from the sale of assets that can generate the 5 categories of income listed above. C. Income constituted by a transfer from another person. Common types of income derived from transfers from others include prizes and awards, unemployment compensation, social security benefits, and alimony received. D. Presumptive income. Common presumptive income includes loans at below market interest rates, expenses borne by others, and low-cost purchases. The four categories of income are not designed to differentiate tax rate, but rather to introduce a credit for active work. The problems with passive income. Passive income can be a path to building meaningful wealth, but there are some serious problems with passive income that you'll need to reconcile before moving forward with any plan. Passive earning streams don't begin out passive. First, there are some profit streams that require little to no effort from you on an ongoing basis, but even these require at least some effort to start. Take a dividend-paying stock as an example. Before you can start generating passive dividend-paying income, you may want to cautiously research distinctive dividend stocks, do your due diligence and purchase your shares. The equal is authentic of many other supposedly passive profit streams. For example, if you are hoping to generate apartment earnings from a property, you may want to spend time finding the proper property, fixing it up and attracting the right tenants. If you choose to make cash from advertising on a blog, you'll need to spend time writing content and attracting a preliminary audience before you can construct that momentum. Many passive profit streams nevertheless require upkeep. Some income streams fall into the set it and forget it, but the majority of passive income streams nevertheless require ongoing upkeep. Within that set, some profit streams can be downright disruptive in your life. For example, if you're making money by way of advertising on a blog, you'll want to create new posts on ordinary groundwork and preserve your website. If you matter heavily on natural search visitors and you're penalized through Google, you will have to shortly adapt your strategy if you prefer to survive. The identical catch-22 situation applies if you personal a condo property. Ideally, you'll generate profits by using lease paid by using tenants. However, what takes place if you have a tenant who refuses to pay rent, or one who destroys your property? You'll want to control an eviction, which can be each expensive and time-consuming. In other words, it compromises both the passive and the income section of passive income. Capital is a big gatekeeper. You'll also find that capital is a huge gatekeeper for many passive income strategies. Anyone can start a blog, extra or less for free, and anybody can try to start an enterprise selling stock photography. But if you choose to make good-sized earnings with strategies like managing apartment property, amassing dividends from shares or loaning cash to peers, you'll need tens of heaps of dollars in the bank. If you've already received your budget collectively and you're making a sturdy move of revenue from an lively source, this may additionally not be a big deal for you. However, it compromises the accessibility of some otherwise commonplace strategies. If you ever considered how you can earn a passive income? Here are 8 strategies for creating a passive income stream. Switch your bank account. Earn interest on savings. Use a cashback or rewards credit card. Buy via cashback websites. Try out robo-investing. Rent out a room, drive or parking space. Invest with peer-to-peer lending. Purchase dividend-yielding stocks. And a new way of earning passive income is crypto staking. Anyway, you must do your homework before you start to invest your life savings in some passive income streams, as you can lose your money or make to yourself another job. Thanks for watching my video, and please before you leave make sure that you are subscribed.